All right, we are live.
All right, we're gonna try this again. It's awesome. I'm excited. How many people do you think are working today?
Ooh,
I, I took the 7 a.m. train, which is later than I usually take it. There was four people on the whole train,
well, I
but that's
usually,
all right.
oh, go ahead.
I was just gonna say we're here. That's all good.
Yeah,
Either way,
absolutely. I stopped
yep.
by Starbucks today and there was one person. Usually there's like a line out the door. So I'm like, well, this is good. This is good for me. So,
Quick in and out. Yeah, I think a lot of people are sleeping it off today. Hopefully, people relaxing, taking advantage of the holiday weekend.
sure.
I think that's a good thing. That's a healthy thing.
Absolutely.
Um,
Spending time with family is very important.
absolutely, absolutely. So, so I know you and I have a few topics we wanted to discuss today,
Absolutely.
and you had written out a few good questions, and I think we can knock them out. We don't have our partners in crime with us today, but still some good stuff to talk about.
I think we can handle it, my friend. I think we
Yeah.
can. All right. So, question number one, what are the most significant insights you've gained from conversations with retail loan officers?
All right. Do you want to answer that one first, or should I go?
Oh, I'll let you go first because
Because we've both been talking to a lot of people, a lot of loan officers, period. It's interesting, this whole conversation around, broker versus retail. And I won't, I'm not here to dog on any particular business model, but there's certainly some pros to being on this side, and they're big. And so here's what I've learned in talking to some of my retail friends and some of the recruits, the candidates we've been talking to, is the pricing to a T. The pricing is notably better here, and some lenders more so. There's a wider gap on some lenders versus others, but it's notably better. Some examples I had just last week: we were 75 basis points better on conventional, 125 basis points better on FHA and VA. So, you know, think about the difference there, especially if you're in the FHA and VA space, because we don't believe, and we've talked about this, Craig, a lot, and we've talked to Troy about it too, but we don't believe that an FHA borrower or a VA borrower should pay more on a percentage basis than person taking out a conventional loan. And it's a very common practice in our industry to have higher margin on the government funding or on the government loans than on conventional. It's a very common practice. But we just don't believe that's okay. So the biggest thing we've learned in talking to retail loan officers is the price discrepancies.
absolutely. I think pricing is very important when you're building a business because you know the goal in all of this is to take good care of clients and to offer the best product the first time. And I think depending on where you're at, sometimes you're kind of handcuffed and you can only offer what you can offer. And at the end of the day, it really depends on who are the people above you that are making the decisions on what that price is going to be. And I think
Yep.
the greater the overhead, the higher the margins, the higher the rates that you have to sell from a loan officer standpoint. And sometimes that it's very frustrating, to see that because maybe that veteran or that person who's going FHA, they could have gotten a better rate just by going somewhere else because that company had less overhead just by default.
Yep. Yep. Absolutely. And a big thing that some of our retail leadership at other companies will say is, well, we can compete with the broker community because we'll just do a price exception on that loan and we'll win. But you touched on it here in your comments, is customers shouldn't have to press or threaten to leave to get a good price.
Right.
Your comment a minute ago is to get a good quote or a fair quote the first time.
Absolutely.
Why should the customer have to press the LO for a price exception to get a good price? I don't think that's fair.
Well, I think that goes back to our pillars as well, honesty, integrity,
Hmm.
transparency. And I think that, we're not here to play games. We're here to take good care of the clients the first time, and we're going to offer our best the first time around, because that's just how we build our business over the last 18 plus years. And I think that that's very important when you're building the foundation of your business, is creating that honesty and transparency, not only with the clients, but with your referral partners and everybody else that you work with. And, that's just pricing.
Mhm. Mhm.
We haven't talked about all the other parts of this that I feel that the broker world has definitely either bridged the gap or have passed, the retail sector as far as technology, processes, and everything else goes. I think
Mhm.
the second biggest complaint that I've heard was just even last week was support,
Mm.
and not having the support that they need to get a file through the process as smooth and stress free as possible. I found that there's a statistic out there that says that if you have to go back to the client more than 3 times, the chances of them working with you again, I think, is like 76% less.
Mm.
So if you have to
If you
reach
have
the
to,
client for more than 4 or 5, 6 times, they've had they get frustrated, they get stressed, and
yeah.
the chances of that repeat business has drastically reduces compared to if you're touching base with them one, 2, or 3 times. It's crazy.
Mhm.
It's like that
Mhm.
3 touch mark is kind of where it makes or breaks. And I
Mhm.
feel like on the retail sector right now is there's not a lot of support.
Mhm.
And I feel that on the broker side, we're turning files in 12 business days or less.
Mhm.
And I feel like that's just another, you know, point to get across, is there is support on the broker side. There
Yes.
is speed, there is the technology that helps us get these files through the door ASAP. We even have AI
Mhm.
on the broker side. We have AI. And I
That's
think that's very, very important as well. What are your
Yeah,
thoughts?
and I think there's a big misconception out there about the lack of support that we have on this side, and it's simply not true. I mean, I always talk about the example of the VA manufactured home that you had that you funded just a couple of months ago. It was a deal where another loan officer dropped the ball. You picked it up, you funded it in 8 days. Um, so to say that on the wholesale side we can't close quickly, it's simply not true. And we've got example after example. You post on our LinkedIn page, oftentimes when our loan officers have a quick clear to close or a quick closing, or clear to close in 8 days, clear to close in 10 days. I mean, the files just move quickly. And that's not just a function of, so a lot of people will say, in our industry too, will say, well, of course you close quickly, like business is down, there's tons of capacity. But don't forget, most lenders have contracted their capacity to, get ahead of the expenses, right?
Right.
So the industry is already adjusted to the lack of business, or the lesser business. Um, so I feel very confident on the go forward that when the business does normalize, or when rates do drop and we pick up some more refinance business, or there's more purchase, they're expecting purchase business to be up 10% year over year for 24. I believe fully we'll still have these fast turn times and ability to move quickly, even when the business picks up. Just one of our wholesale lenders had hired how many people last month? Was it 500
Yeah.
operations and closers? I mean, um, that's just one wholesale lender. So the wholesalers, or many of the smart ones anyway, are already gearing up for this eventual drop in rates. And who knows? That might be in 3 months. That might be in 6 months, 8 months. It may have already started. Who knows? But the smart wholesalers are going to be prepared. So speed will not be an issue, has not been an issue, and won't be an issue for us in the future.
You're exactly right. But more importantly, we're preparing for that influx of
Yeah.
new business. If you're not in expansion mode right now, if you're not um, preparing for 2024, then you're going to be on the wrong side. And that's where I feel like a lot of loan officers are going to figure it out very soon, that the business is going to shift. There's going to be a huge influx of business, and the companies aren't going to be prepared to handle that business. And that's going to be one of the biggest issues that I think we're going to see in the next 6, 12, 18 months is how are these companies prepared and how are they going to handle that influx of new business? Because are they being proactive right now or are they in reactive mode? And are they going to continue to be in reactive mode for the next 6 to 12 months to gain back all their cash flow that they burnt through the last 12 to 18 months?
Hmm.
That's going to be very interesting to see in the next 6 to 12 months is how are these larger retail companies going to prepare for that influx of new business? And I feel like there's going to be a lot of them that are going to be behind the eight ball.
Yes, yeah. Preparation's key, not only for the retailers, but and for the brokers, for the loan officer, for the wholesalers. I mean, everybody right now, and we talk about this a lot too, is should be doubling down on their systems, on their education, because the influx of business is coming. So we want to be prepared. And
Yep.
Cody, I see your comment, and I appreciate that. But what about me? Craig Messman is your hero, but what about me? Thanks for chiming in, Cody. That was nice. Um,
um, and that goes to building the bench too, surrounding
yeah,
yourself with really good people and making sure that, you have a really good system and support staff to help you handle that business. And I think that there's a lot of great talent out there. And I think there's a lot of great talent sitting on the sidelines right now. And, we're in thrive mode. And I feel like, as we continue to expand, we're going to continue to be able to bring on new talent, great talent,
yes,
teammates that are going to help us, continue to win all the way through 25, 26, 27. I don't think that this is just going to be a 6 to 12 month situation. I think it's going to be 3, 5, 7, maybe 10 years of purchases and refi business that's very steady and
yes,
consistent.
yes. And I'm excited for that because, there's certainly been a cleansing out period. It needed to happen, as painful as it is. But for those of us that are still here, I think it's going to be a great run for a long time. All the demographic data points to a lot of homeowners coming into the market. Um, when rates drop even just a little bit, I think sellers are going to feel a little bit more comfortable listing their properties. The aging population is another thing. Baby boomers don't need their big houses anymore, and there's certainly a lot of millennials out there willing to scoop them up in the right time. So I think a lot of the trends, not just interest rates, but a lot of the demographic trends play well into what's going to bring us a great 10 years. And
Yep.
by the way, on that note, I touched on the cleansing. So I hear people in our industry almost mocking people that didn't stick it out or going into a different industry. Um, I I never understood that because, hey, if this isn't the right time for you in this industry, if uh, if we all need to feed our families. I applaud those that are moving on to something else. It's to me, it's just self awareness. Got to do what you got to do, and maybe this isn't for you for the long term. So, hey, God bless. Go for it.
Absolutely. I think,
Hmm.
you know, it takes a very particular person to get into this industry. And I think that sometimes you just don't know what you don't know until you are in it.
Yep.
There is
Yep.
no book that says, here are the 10 ways to succeed in mortgages. There's nothing out there that really teaches you how to do the business other than just doing the business. And that's why I feel like the people that are entering this industry, they need to surround themselves with a really good coach or a mentor to help them grow quickly, because this isn't an environment where you can go 6, 12, 18, 24 months of not being able to close deals. This is an
Right.
environment where you need to be in building your business and having deals closed within the first 90 days. And sometimes I feel like people, they read the newspaper, they read all these wonderful posts and on Facebook about how successful these loan officers are, but they forget about in the quiet moments what those loan officers were doing on the nights, the weekends, the holidays, building their business. Were they hitting open houses on Saturdays and Sundays? How many were they hitting? Were they hitting 1, 10, 15, 20? And those are the things that they don't talk about, are the things that people do in the quiet moments and when people aren't watching what they're doing. They just see the success stories, but they don't see that they put in a 13, 14, 15-hour day continuing to build their business in this market. If you're not willing to do all that plus more, then it's going to be tough to build your business right now, because the people that are in the business right now are the ones that are continuing to do that.
Yep, absolutely. And Cody brought up a great question here in the chat. I think we should touch on that for a minute. But I think one of the biggest red flags we're seeing, and this is related to pricing, but is fat corporate margins. Um, it's easy to see when you compare pricing. It's easy to see who's juicing their margins because they've got to cover their overhead. Like they've got to cover the multiple offices out the country, the enormous corporate headquarters, the layers of management. Like to me, that's just the biggest red flag, because consumers today are smart and they're shoppers, and they should be, right? There's so much access to immediate information, um, that to me, that's the biggest red flag. I think the companies with the big fat corporate margins are going to struggle, even as the industry comes back a little bit.
Well, and you go back to the meeting that you had last week, 75 basis points to 125 basis points. That's a difference of an eighth to a quarter or 3/8 to a 0.5%,
On rate.
depending on how much they're out. I mean, that's a lot for a consumer. I mean, that's the difference of, you know, 40, 60, 80, 100, 120, depending on, what their loan amounts are, down payment, etc. But, that's a lot of money when you think about it over the next 12 to 18 months, just by, shifting, going from broker A to retail B or retail A to broker B. It doesn't matter. But at the end of the day, you're right. Clients are savvy. There's so much information on the internet these days that, I feel that you can get a really good idea on the consumer side as to what the rates should be. Now,
Yep.
barring, down payment, credit score, type of property, etc.
Yep. Absolutely. And Cody brought up another great question: is how does the average LO know if their margins are high? Um, it's as simple as doing a price comparison. And I do this all the time. I have my friends at other industries, or sorry, other from other companies, will call and say, "Hey, where's your 30-year fixed rate today?" Um, and we do a quick comparison on the phone or over Zoom, so we can show our screens to make sure nobody's exaggerating. Um, and that's the easiest way. I mean, that's the easiest way. And what I've done too is I've offered out to any of my friends in at any companies, is to do a quick price comparison. There's no pressure, no recruiting allowed. It's just a simple price comparison. I've done that for a number of people. So I'm going to drop a link in my calendar here into the chat. So if anybody that listens to this recording or is on now would be willing to do that, happy to do it. Happy to
You
do a
know,
price comparison.
Cody makes another good point, screen sharing. I think real-time pricing is the most important, and being able to see it on someone else's screen is very important as well, because then there's no BS, there's no games or anything like that. You can really price it out real time, face to face, so that way everybody knows exactly what's going on. It's an apples to apples comparison, and it just gives a little bit more transparency and just makes things go so much easier for people. And then they can see, you know, is the margin built on the back end or not? Because most loan officers don't realize that margins are built behind the curtain.
Hmm.
You might see a rate sheet, but you don't know if that rate sheet has an extra 50, 75, 125 basis points in there until it's too late, right? Until you've already quoted that client their rate, and then they go talk to somebody else and it's a quarter to a half a point cheaper.
Yep.
And I think that that's very important, to do those live comparisons, so that way then you can truly see what's going on. Then follow up a couple days later just to make sure. I think that's one of the biggest things that I looked for when I was joining a new company 20 years ago is, what are the rates? What are the margins? How are you going to support me? How can you help me continue to build my business? And I think that that's very important.
Yes, and Troy actually brought up a really good point. I'm glad you mentioned that, Troy, because I know several people that this has happened to. It's happened to me, where there's the recruiting rate sheet. So you go in, and some companies will give logins, and they'll say, okay, price out your scenarios to your heart's content, and it's a different login than what you get when you get to the company. It's it's unfortunately a very common practice in our industry. So just something to be aware of, and a huge red flag, by the way.
All right. One thing that we touched about last week, and you made some really good points about it, signing bonuses.
Yeah, sign-on bonuses. I mean, hey, it looks good up front. It really does. I get it, but the reality is it always comes with a hook. It always comes with a long contract. The longest one I've heard recently was 3 years. They took the sign-on bonus and had to sign a contract that they can't leave for 3 years. What people don't think about when they see the dollars, they don't think about the fact that if it doesn't work out for any reason, or if they decide to change their corporate margins and now your pricing's out of whack later, you can't leave. Like, you can't adjust. So all you're really doing is taking your income forward. Like,
You're
that's all you're
prepaying.
doing. Yeah, and great. The $100,000 sign-on bonus sounds great, but after taxes, it's what, 65 grand. And you'll remodel your bathroom and go on a vacation, and there's almost nothing left. And if you do have to leave, you have to pay back the full 100 in that example, right? Bonuses vary, but you have to pay back the full pre-tax amount. Taking a sign-on bonus or some type of a guarantee, I think, is a huge mistake in virtually every case, because you're stuck.
Well, you're stuck, but also you have to remember that if you didn't do your due diligence up front to figure out, what are the difference in rates, what is the difference in margins, like you said, we're prepaying that bonus because on the back end, they're making an extra 90 to 150 basis points. Don't think for a minute that a company who's giving you $100,000 bonus isn't looking to get repaid back, right? It's not like, here you go, Brian, here's
It's not,
$100,000.
yeah,
No,
it's not free money. Yeah.
and they're banking on those refis coming in the next 6, 12, 18, 24 months, or even 36 months. Can you imagine, some of these people that have taken sign-on bonuses and then having to sell 150 basis points higher margin
And
for the
if their
next
client
year,
talks
the next two
talks to
years?
us, if their client talks to us, they're going to lose that deal every time. They are. Um, so
And
yeah,
then you have
yeah,
the added pressure to it as well. Like, hey, we gave you X amount of dollars. Why aren't you performing?
yep,
Well, I'm losing deals.
yes,
And I feel like that's just a no-win situation. I have yet to find a signing bonus that's actually been
a true
good.
bonus.
Yes, an actual bonus without any catches or anything like that. Yeah, I think that's one of those touchy topics. Is there's a lot of people that are offering them, but are they also offering them because they're having a hard time getting people to join their company because their margins are out of whack?
Yep. And I think well, that's certainly, there's a lot of things that go into play here, but I also think that and Troy mentioned this, so it's brilliant, because what the sign-on bonus does is it plays into someone's insecurity, right? It's am I secure enough in my own skill and work ethic to make enough money for a few months through the winter market, to support my family? They're playing into their insecurity. The reality is, the 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 constant here is the loan officer. Like, if you're
Right.
going to produce 3 loans a month or 4 loans a month, that's going to happen no matter where you go. And I would argue, if you go to a place that has better corporate margins, that can offer a better place to your client, if you're averaging 4 deals a month, you should be able to do 5 or 6 here, because you're not going
Right.
to lose to those pricing scenarios or those competitive pricing issues.
And I think that goes back to the volume part. We've
Yep.
talked about that multiple times. Volume cures everything, right?
Yep.
And I think that the more volume that you're doing, especially right now when the refis happen, you're looking at another 2 or 3 deals. So if I'm closing 10 deals this month, that's going to turn into 20 or 30 transactions over the next several years. And I think that right now you should not be losing deals due to higher margins on the corporate side.
Right. Absolutely. Absolutely.
All
And I
right.
agree.
Oh, go ahead.
Oh, go ahead. Go ahead. You got another question you
Yeah, I
want to
was going to
discuss?
go on to number three, because I feel like one and two we've kind of covered together.
Yeah,
Uh,
yeah.
Number three, how are you preparing for 2024? Or how should a loan officer prepare for 2024? Um,
Well, I'll tell you what I'm doing right now, and I know you're doing a lot of great stuff too. A lot of our teammates are, but I'm doubling down on my work ethic. I've always been one that works a lot. I grew up on a dairy farm. It's just part of my DNA. You too. You grew up in a farm. You're the only person I know that works more than I do. But I'm doubling down even on my current work ethic because I believe that the opportunity is enormous to bring on the right teammates at this time, which is a direct, part of my role. But also the opportunity to network and meet with a number of real estate agents. If I'm a loan officer, the opportunity to network with a number of real estate agents hasn't been greater because overall the business is down. So they've got a little bit more time to spend with us in building relationships. So I would absolutely double down while everybody else is taking a break for the holidays. Just work harder, meet more people, make more friends.
yep.
Never been a better time. Develop our skills, learn. Um, it's time to double down.
I think you're right. And I feel like, what you do in November and December sets up January and February. And
Yes.
if you're not out there meeting with people, building relationships right now, today, then January and February are not going to be the type of months that you thought you were going to have
Mhm.
if you're coasting in November and December. Like, you should be out there meeting with people. You should be going to networking events. You should be hitting open houses and meeting with as many real estate agents, referral partners that you possibly can, insurance agents, attorneys,
Yep.
general contractors, anyone and everyone that you can possibly meet. One of the things that I do, is if I ever go out to dinner, is I'll sit at the bar
Hmm.
so I can meet more people.
Yep.
Rather than sitting in the at the table in the corner, I want to sit at the bar so I can meet all these other people and talk to them and learn about their story and learn about who they are as a person. And I feel that the more people that you meet, the more value that you can add to them as well. I think of like my job as the center cap of a wheel,
Hmm.
and the more people that I can meet, the more people that I can either be introduced to or I can introduce them to other people.
Yep.
And in this market, the more people that you're able to meet, the bigger the sphere is going to get. The bigger the sphere, the more opportunities that you're going to have. So going back to you, doubling down and meeting with as many people as possible is going to help you continue to grow your business as well as my business. And I
Yep.
think for every loan officer who is not out there meeting with people, or I just feel like it's going to be a tough January, February for them, because now is the time to build your business. I love the holidays. It's fun. It's exciting. You go to holiday parties.
Yep.
You can go.
Everybody's guards down. Everybody's in a good mood. Most people are in a good mood, I should say.
And
Uh,
then it switches, right?
it does. It does. And it might depend on the day, but yeah, my friend Neil always said, one of his many famous sayings is, if you want to do more business, meet more people. Right? So
Absolutely.
whether it's sitting at the bar for dinner instead of a table, and you can network and meet people there, or it's going to the holiday parties and meeting people, or networking events, or there's tons of opportunity. Social media. I started a conversation just a week ago with a loan officer on social media. We started talking about hockey, youth hockey. My son was a hockey player from first grade through eighth grade, and this particular person was a hockey mom. So we just started talking about hockey, and it turned into a work conversation. So we can start these conversations in so many different ways, and it sometimes leads to work or to a benefit.
I'll give you some advice on social media, right? Social media, it seems like it's a very daunting thing to do, especially when it's live, right? But I think the more reps that you do, whether it's recording videos, whether it's talking in front of a camera, live, it doesn't matter. But, for those people that are hesitant about doing social media, you just got to do it. Your first videos are going to suck. Let's just be honest. I'm going back through some of my old recordings, and it's like the first video I ever shot, I think I shot like 30 takes of it before I found the one. And I feel like with social media, you just got to get out there. It needs to be natural. It needs to be, organic, and that's why I love these live events, because if we screw up, we screw up, right? There's no there's no turning
there's
back over, right?
there's no hiding behind the editor, right?
No, no, there's not. And obviously the lighting and all that wonderful stuff, they can't jazz that up either. So it is what it is, right? It is what it is. so, so I
I
feel
love
like,
it.
with a lot of people out there that are hesitant about doing social media, I personally find it fun, especially the live events, because there really is no script. We're just BSing and talking about things that have come up, and our experiences, not only today but in the past as well. And I feel like, for those of you that are hesitant, reach out to us. We'll give you some tips and help you out to the best of our ability. And we have an amazing recording studio. I don't know why we don't use that more for these events, but
Well, I
maybe
heard
someday we'll get there.
you and Troy and I are going to get in there after this, right? We're going to do it today.
Absolutely.
Yeah.
Yep. I had to have a
And
talk with him, and I told him, Troy, we're getting in the
it's
studio
time.
today.
Is that why you emailed me yesterday saying hey, about
Yeah,
it?
and you
you,
were so
you
excited.
gave him a shove.
Yes, exactly. And you were so excited. You called your wife. You're like, "Hey, can you pick me up in an hour later?" So,
I
yeah,
need some time.
yes, getting Troy into the studio is going to be exciting. So I think that once we film a bunch of that content and post on social media, it's going to be. He brings some very valuable insights, not only just in business but in personal life as well, as far as
Absolutely.
experiences. So I'm super
Absolutely.
excited about that. I think we're at about 30 minutes right now. Anything else that you want to talk about?
Now, somebody did post a question here, and I replied in the chat, but also just want to say we do post the recording of this. If anybody's interested in watching that, we post the recording when we finish. So if you want to listen to it later, you certainly can. So thanks for those of you that joined us. Thanks, Craig, for doing this. And
Yep.
we'll do this again next Friday, 8 a.m. Central Time.
All right, sounds good. Thank you, sir.
Happy Thanksgiving, guys.